Welcome, everybody. This is Jeff Phillips with Padgett Business Services. We're going to let a few more of you just file in as we get started. We've got a large audience today, so we want to give everybody a second before we get going. I'm calling in from Northwest Florida, Pensacola, and hope wherever you are, you're safe and having a great start to your March. And we really appreciate you being here. I think we'll just let a couple people file in while we get going. Welcome to Padgett Tax Update number 1. This is a session for our clients in the small business community who, in order to give you the latest updates on whatever is going on relative to taxes during this incredibly busy time of year. So it's a very important update, and we appreciate you being here. There will be plenty of questions. We've actually already received numerous questions as you registered. Thank you for those. We will leave time at the end. Our tax team is here standing by to answer those questions after our brief presentation. I'm Jeff Phillips, as I said earlier, the CEO of Padgett Business Services in the U.S. I'd love to just take a second to introduce our company before we get into the presentation. Padgett Business Services has been in the U.S. and Canada doing taxes, accounting, and payroll for small businesses for over 50 years. I'm a small business owner. I'm married to a small business owner, and I'm the son of small business owners. And so I know firsthand the importance of having the right advisor next to you to handle issues relative to accounting, tax, compliance, but also just strategic advice. I did not get in business for myself. I owned a recruiting business before I joined Padgett. I didn't get in that business to become an expert in accounting and taxes, and that's why your advisor in your market is so critical to you, and we appreciate the fact that you're a client of ours, and thank you for being here. You probably know more your local advisor. I want to explain our role. We're a home office that's designed to get to put our local advisors, our local office owners in front of the line with everything that's coming out of Washington, D.C. in terms of the absolute latest information relative to taxes and how it affects you. We put them at the front of the line so they can put you at the front of the line. That starts by having teams inside Washington, D.C. who are giving us information as well, and then we filter those to you. A couple of housekeeping items. This planned for no more than 45 minutes on the presentation. All in, we're going to do a short overview, then take your questions. We're using GoToWebinar for today's session. You have a question panel. You may at any point in time enter in whatever questions you have. Our team will filter them and ask Roger and Annie, who I'll introduce in a moment, to answer those questions for you. The copy of all of our slides are available in the handout section of GoToWebinar. Hopefully you'll be able to find that. You are muted, so you can't talk during the session. And if you need to get in touch with your local Padgett business owner, you can find their contact information at our website, which is www.padgettbusinessservices.com. Want to bring in our president out of Athens, Georgia, Roger Harris. Roger has been the COO and president of Padgett Business Services since 1992, but has worked for the company for even longer. Roger is a noted expert on the matters of small business accounting and taxes, has been quoted in Wall Street Journal, USA Today, The Morning Business Report, Bloomberg, and Accounting Today. He's testified before the IRS, is a subject matter expert on matters of small business, the world that we all live in, and how tax filing and tax season affects your business. He's offered testimony to the Senate and House Small Business Committees, the House Ways and Means Committee, and the IRS Oversight Board, and is a fantastic instructor on these matters, which is why he's going to be taking over for the presentation from here on out. So again, ask your questions. We thank you for being here. We thank you for being a part of the Padgett family as well. And Roger, good morning. I'll turn it over to you.
Thanks, Jeff, and thanks to everyone for joining us today. And I really appreciate the fact that you've taken time out of your business schedule to be here today. And so we feel an obligation to make this meaningful to you. And the reason we're doing this is because we think it's important at Padgett that our clients benefit to the extent that they're allowed by the law particularly through these difficult last 12 months. And so today we're going to try to bring you up to speed on where certain important programs stand. I know I've talked to small business owners for more years than I want to admit, and you aren't really concerned about a lot of details. You're concerned about ultimately how it helps you or impacts you. But sometimes details can be important. And we're going to try to keep this presentation at as high a level as we think we can. But as I said, details can be important. And what I encourage you to do is soon after this session, however you are meeting with your current Padgett office, that you schedule a meeting, and that's when the details will be hashed out on an individual basis, because it's impossible for us in a setting like this to know the specifics of everything that could impact you directly. But we hope that you'll be much more knowledgeable and prepared and feel comfortable that you're getting everything that you're entitled to, because it's been a tough 12 months. It's been a very tough year for small business owners like yourselves. You see the agenda. It's unfortunately going to cost us to have to revisit some of the last 12 months, which I know has been extremely difficult. You know, as we sit here today on March the 2nd, if you think back a year from now, I don't think we quite knew what was ahead of us. We knew something was happening, but I'm not sure any of us could have predicted what happened about, I guess, 10 days after this, on about March the 12th, when our entire world changed. Our businesses were shut down. We all wondered whether we were going to have a business to come back to, and employees wondered if they were going to have a job. And we at Padgett shared your concern and tried to step in and help, as did Congress. And that's really what we're going to talk about today. And as I said, unfortunately, we're going to have to start by going back to last March. Last March, Congress passed something called the CARES Act. There were many parts of the CARES Act, but there were two particularly important parts as we look forward to where we are today. The first part of the CARES Act that we focus on is the employee retention credit. You didn't hear a lot about it last March, because one of the things that Congress did was say that we had to make a choice. We had to make a choice between a tax credit and a loan program. The loan program was the payroll protection program. And most of our clients, and I'm sure most of you, participated in that program. That program allows you to borrow money based primarily on the size of your payroll. And if you complied with certain rules on how you spent that money, that loan would be forgiven. The employee retention credit was a tax credit based on wages paid to your employees. It was going to be handled through the payroll tax system. Nothing that we're talking about here right now has anything to do with your business or personal tax return. This was going to be handled through your payroll tax system. And it was a refundable credit of up to $5,000 per employee for the rest of 2020 that would first offset any of the payroll taxes that you owed, and then beyond that would refund you the money. So you're sitting there wondering, well, gosh, why didn't somebody tell me about that? Why didn't I take advantage of that? It's March of 2021. Because Congress threw a little kicker in there. If you got a payroll protection loan, you weren't eligible for the employee retention credit. So you had to pick one. And most, if not all, businesses selected the payroll protection program because it was a greater influx of money all at one time. And ultimately, it was going to allow you to have that loan forgiven if you did certain things. And in the beginning, one of those important things was you had to spend 75% of your loan proceeds on payroll. It was intended to allow you to keep the employees through what they thought was hopefully a short-term pandemic, which, as we've all painfully learned, it was longer than we anticipated. So the reason you didn't hear about the employee retention credit is probably because for most everyone, the payroll protection loan was the better deal. But as happens when things happen quickly in Washington, changes have to happen. So the payroll protection program was modified in April. I think most of you remember that we had 8 weeks to spend this money. Actually, in April, the program was so successful it ran out of money. And really what happened, probably of the biggest impact to you, was that money was made available and you could then go back and get a loan if you hadn't already participated. But something else happened in April. Our friends at the IRS issued a ruling that said if you have a forgiven PPP loan, which was everyone's goal, that the expenses that you paid with those forgiven loans would not be deductible. So let's talk about what that potentially meant. If you got a $50,000 PPP loan that was forgiven, then whatever expenses you put on that application to justify that $50,000 forgiveness would not be deductible when you filed your tax return. So you were probably going to get a little surprise at the end of the year when your tax earnings were higher than you saw them on your financial statements throughout the year. Congress, Padgett, and many others did not agree with that ruling, did not believe that was the intent of the legislation, and we all started lobbying Washington to have the IRS reverse that. But where we stood in April was we still couldn't take the the retention credit, but PPP loans were still out there for us to take. And then something changed in June. Again, the PPP loan was very successful. And Congress tried to make it more business friendly in the summer. Something that at the time seemed like more of a benefit for a forgiveness process, and you'll see in a few minutes how it's really going to be helpful now. You no longer had to spend 75% of your loan on payroll, you only had to spend 60. You also had, instead of 8 weeks to spend the money, you had 24 weeks. So they were trying to make it easier for loans to be forgiven. And again, still at this point, no change had been made to the employee retention credit. It was still a choice between PPP and the retention credit. At this point, we kind of, just to kind of give you a little background on how we were involved in this, at last time we checked in the summer, Padgett had supported its clients, over 1,500 of its clients receiving PPP loans, and the amount of those loans were over $90 million. We also helped some of our clients receive some disaster loans that put the total amount of over $100 million. I'm sure those numbers are much larger today, but we've spent a great deal of time trying to make sure that our clients made it through this tough year by getting their PPP loans not only funded, but ultimately now we're in the forgiven process. So here comes December. Actually, December 27th is when President Trump signed what was called the Consolidated Appropriations Act of 2021. Did a couple of things. Number one, put more money into the PPP loan program and opened up for those of you either an opportunity to get your first loan if you had yet to get one, or a second loan. So there was more ability to borrow more money through that program. It also continued to simplify the process for loan forgiveness. So if your loan was under $150,000, there was a simplified form that required less record keeping, or less record keeping to be furnished. You still had to have it internally, but it simplified the process. Another big change, we just talked about it a minute ago, Congress did act, and now we can say, at least on the federal level, that the expenses that you pay with a PPP loan are now deductible. So that potential surprise and change was removed in the December Act. It also expanded expenses that you could use for your forgiven loan. And again, you'll see the importance of that when we move forward. And If you also got a disaster loan, I know some of you did, and you got what was called an advance of that loan. It was actually up to $10,000. It was $1,000 per employee. In the earlier rules, if you got one of those advances and you had a PPP loan, you were going to have to pay back the advance through the PPP loan program. Congress repealed that so that you don't have to pay that money back with the PPP loan still being fully forgiven. And a small thing that has become a little more important recently, it created a new calculation for our farmers. And we'll talk a little bit about why that's important today. But maybe the most important thing that they did in the December Act is they now remove the restriction from you being able to take the employee retention credit and have a PPP loan. So now all of a sudden, we were looking at people who for all of 2020 might have qualified for a retention credit, which was up to $5,000 per employee. And they extended the law beyond December 31st. They extended it out to June 30th of 2021. They increased the percentage that you could of wages that would qualify from 50 to 75 to 70%. They increased the $10,000 per year limit in 2020 with a $10,000 per quarter limit for 2021. So what does that mean to you? It means when you walk out and look at your employees at the end of this webinar, as you count them and look them in the eye, potentially every one of them are now a $19,000 tax credit in your employment. Now, can you get $19,000 for every one of them? Don't know. That's what we're going to spend some time talking about now. But now we have the opportunity to not only help you get a PPP loan and help you have that loan forgiven, but potentially there is up to $19,000 of tax credits, again, through the payroll tax system, not through the income tax system, that you are eligible for. And let's talk a little bit about the challenges that we face, because this was done in December and made retroactive to March when the CARES Act first passed. Again, it was extended through June. So you're probably in one of two positions today as a small business owner. The first one is you have already received one PPP loan and already applied for and probably received, or at least it's being processed, your first forgiveness. And in doing that, at that point, you knew nothing about this retention credit. You had no motivation to do anything but get your PPP loan forgiven. So you packed as many wages on that form as you needed to make sure that that loan was fully forgiven. Well, now that becomes a baseline for which we have to live with, because now for us to get you the retention credit, we have to do one thing. We have to isolate wages that were used for forgiveness, because we cannot use the same wages that allowed your loan to be forgiven for the retention credit. So if you have already gotten a PPP loan forgiven or have already submitted an application for forgiveness, you need to get with your local Padgett office and work through the dynamics of how many other wages were paid in 2020. And you have the potential, if you can find $10,000 of qualifying wages per employee in all of March through December of 2020, you will have a $5,000 credit available to you for each of those employees. Now 2020 is over, so how do you go about getting that money? You are going to have to go back and amend the payroll tax forms that you filed for 2020. And in doing so, you will make your claim for your refunds at that point. That's the good news. The bad news is when you send those forms in, it'll be a form 941X if you care, and most of you probably don't care what the form is. You just care that it gets sent in and they can start processing it. Those have to be processed manually. And the IRS is still catching up themselves from all the differences, problems with the COVIDs. So we don't know how long it's going to take before you'll see those refunds coming. But again, Get with your local Padgett office, look at your forgiveness application, look at your payroll that you paid for all of 2020, and determine how many wages you have that are eligible for this credit. You're looking for at least 10,000 per employee if you can find it, and you will have a $5,000 credit available to you for 2020 for each employee that has those wages. Again, unfortunately, that's not going to work quickly. Now, what about 2021? As I said, they've extended this through June. They've increased the percentage from 50 to 70, and they've increased the wage amount from 10,000 a year to 10,000 a quarter. So now you have the potential of each quarter having a $7,000 credit for each employee. Now, that becomes important because if you have not yet applied for PPP loan forgiveness, or if you're getting a second loan or your first loan, and obviously forgiveness is somewhere down the road, one of the things that you want to do is try to use the other 40% bucket of expenses to its full capacity. In other words, save the wages for the retention credit, not for loan forgiveness. The law requires you to have at least 60% of your PPP loan forgiveness to be based on wages. Your goal here, again, working with your local Padgett office, is to make sure that you get 60, and if all possible, not $1 more than 60%. Use the things like rent, utilities. There's been some expansion for PPE equipment. There's too many P's going on here. There's PPP and PPE equipment. Certain remodeling that you had to do is important. You want to use those other things, if at all possible, to make sure that those wages aren't used up and you can use the wages for the retention credit. Now, two important things to know about the retention credit. You still have to qualify for the credit even if you have the wages. And there's two basic ways to qualify for the retention credit. One, if you're a restaurant or probably a barber shop or a beauty shop, it's pretty easy. That you are impacted by some government order that restricted your trade. So if you're a restaurant and you lost indoor dining, or if you're a barber shop or a beauty shop and you were required to close, that period of time that government order restricted your activity makes you qualified for the credit. Now, if you are not subject to a government order, you can also qualify for the credit in 2020 by showing a decline in your gross revenue of 50% over 2019. So let's say, pick a business, but you were not subject to closing by a government order, but your gross revenue in 2020 declined by 50% or more. That makes you eligible as well to claim the retention credit. One of the other changes in this bill in December is that 50% for the 2 quarters in 2021 is now 20%. So you have 2 ways to qualify for the retention credit to where it matters that you have these wages. That's either because the government has required you to be shut down or work at a reduced capacity, or you don't have to have both, you have to have one or the other, or your gross receipts declined by more than 50% in 2020 or by more than 20% in 2021. If you meet those tests, then again, working with your local Padgett office, we will identify for you the wages that qualify, and we can help you apply for those credits. Now, we're still in 2021, so we don't have to go back and ask for a refund. What you can do to get immediate access to those dollars in 2021 is you can claim them as a credit against those payroll taxes that you pay weekly, monthly, quarterly, however, depending on the amount. So instead of writing a check to the IRS, though you don't really write it to the IRS, but you pay it for the taxes that you withheld from your employees, you can use this retention credit to keep that money. And then if the credit exceeds what you would normally pay for those payroll taxes, the difference can be refunded in a timely file form that you're filing for the first and second quarter of 2021. Now, if you're in the middle of your second PPP loan, can you identify what wages you're going to use and use the 941s? Maybe, depends on the size of your employment and the wages that you pay everyone. If you can't take immediate access because you just don't know what's going to happen in the first quarter or the second quarter, you can go back and amend those returns at a later date once you've come up with a final number for your PP loan forgiveness. Again, unfortunately, that's going to put you into that place where we're having to wait for manually processed returns. But potentially, as you look at those employees again later today when you leave this webinar, now when you saw them, they were worth 5,000, now they're worth 19. So there's a lot of money in this retention credit. So it was a big deal that Congress has allowed us to benefit from both the payroll protection loan program and the employee retention program. And what we want to commit to you at Padgett is that we want to do everything we can to work with you to maximize the ability for you to benefit from both of these programs. The payroll protection program, we got a lot of experience dealing with that one. That's old hand. The ERC is going to be take a little more work with you, a little more planning opportunities, particularly if you haven't had a loan forgiven yet. But there's money there, and we want to make sure that we can help you. So I really encourage you to get with your local Padgett office as soon as you can. Start working through the details of what happens in 2020 and in 2021. You're also in kind of a unique position right now. The Biden administration announced a special PPP open date, I guess to call it, of 2 weeks where the SBA will only process loans, PPP loans for businesses with under 20 employees. If you are under 20 employees, you have until next Wednesday, March the 10th. I don't know how big a help that is, but for right now, only small businesses can apply. There is one thing, you remember I mentioned, you probably don't because it was a while back, but I mentioned they changed the rule about farmers and ranchers. Any of you that are a Schedule C filer or a self-employed, you're not a corporation, you're not an LLC, you're just a sole proprietor, and you got a PPP loan, you remember that earlier you got that loan based on your net profit. And if you had employees, there was some additional funds for that. But farmers were getting their loan calculated on their gross profit, not their net profit, meaning their gross receipts minus any cost of sales. Most businesses' gross profit's much higher than net profit. The Biden administration has indicated that they're going to mimic that farmer and rancher calculation for sole proprietors, but we don't have final guidance on that yet. So while I sit here and encourage you to take advantage of the next 8 days for this special opportunity to apply for a PPP loan, if you do so before the Biden administration's guidance on this new calculation comes out, you're stuck with the old rules. You're stuck with net profit instead of gross profit. So on one hand, there's an incentive to hurry up and get your application in, but there may be a bigger incentive to wait a few days if you're interested in getting a second loan and you're a Schedule C filer, because you might be able to get more money by waiting and using their new calculation. So again, it's like everything that happens in Washington, they tell you to go take a left, and then as soon as you take the left, they tell you to turn around and take a right. So we're kind of going back and forth, and but I would suggest that you might want to wait a day or two and see if we can get some guidance from Washington on this. And there's, as I said, there's details that still aren't completely ironed out, and Annie's going to talk a little bit about what that's going to mean for us in this tax season. But we will make sure as soon as those things are known that our offices will know, and therefore you will know, because we're committed to making sure that we repay the loyalty that you have shown us for over 50 years now of allowing us to help you. And that means we need to make sure we're helping you to make sure you get everything you're entitled to in a timely and accurate manner. And that's why we're doing this today. And that's why I hope that you will continue to see us do more and more of these and hear more and more from our office owners. So in wrapping up, again, thank you for everything you've done. God bless you for the last 12 months. Hopefully we're all seeing the light at the end of the tunnel, and whatever normal means, we'll get there soon. And we just want to make sure that we're doing our job to help you be successful. Next, I want to introduce the head of our corporate tax department, Annie Schwab, and Annie's going to talk a little bit about the stimulus payments. I know a lot of you are wondering about that, and then once she wraps up, we'll answer some of the questions that you submitted in advance and during the day. So thank you again for joining us today, and Annie, it's all yours.
Thank you, Roger. And I do see some questions coming in as it relates to the PPP and the retention credit. I'm not going to skip those, but I do want to cover just a few things, and then we'll open it up for questions. Most of you probably know, stimulus checks, rebates, recovery rebates, the EIP, economic impact payment. Basically, there were 2 rounds of this, and I just want to go over a few specifics. The first round was in March. It was $1,200 for taxpayers with an additional $500 for dependents. There's thresholds and various things, but those were the amounts then. And then in December, there was a second round, and that was $600 per taxpayer and $600 per qualifying child. So if you're sitting there going, I think I got it, maybe I didn't, maybe I'm due more, I can't quite remember, that's okay. We will reconcile your recovery rebate credit. So we'll reconcile this when you file your 2020 tax return. So if you were due money and you haven't received it, it's not lost. When you file your tax return, you will be able to get that then. And there is a IRS webpage that you can go to and put your information in, and it'll tell you what your amounts were. So if you can't remember what you got, you can always go there. And the big question of the day is, are these taxable? The answer is no. These are not income payments. These are actually credits. So the amount that you received for either round 1 or round 2 are not included into income. I will mention that if you got, say, your second round didn't come until mid-January, those are still reconciled on your 2020 tax return. It has nothing to do with 2021. There is some talk that there could be another round of these, and I'm assuming that those would be reported in 2021. I don't see any reason why you would have to go back to 2020, but as soon as information comes out on that, we will make sure that we get that information to you as well. A couple of other things. Tax season is going to be hard this year, not just for tax repayers, but also for taxpayers. And the reason why is, as Roger mentioned, is we're waiting on legislation and guidance. It could come today, it could come tomorrow, it could come next month. And based on what comes and how retroactive it is, there might be the need to amend tax returns that have already filed. So if you're thinking you might have to amend, is the next question, well, then should I just wait to file? And there's no right or wrong answer here. Talk with your local Padgett office, pros and cons, things that could affect you, whether you want to go ahead and file now, knowing that there's a possibility of amending. If you want to wait a little bit, see if we get additional information, and then file. It's really up to you how you want to proceed. I know the feds most of the forms are ready to be filed. Most of our guidance on the PPP has been provided, at least for 2020, but the states are behind. I know just yesterday or the day before in Georgia, they made legislation was passed in Georgia with regards to the treatment of the PPP loans in that state. Some states are following or conforming with the feds as it relates to the treatment for PPP loans. Some are not. Some are putting it into income. Some are not allowing deductions. So you have to be careful about your state guidance. And as Roger also mentioned, the IRS is backlogged. There's stories of paper 2019 tax returns just sitting in piles, waiting for someone to process them. So not only are some people still waiting on their refunds from 2019 tax returns, they've been backlogged just like us, low staffed, unable to get into the office, just trying to get as much done as possible. So things might move a little bit slower, especially on anything that can't be electronically filed, but has to be paper filed. That's definitely going to take a little bit longer to get processed. And lastly, we have a new administration. So DC is adjusting just to post-election. So it might take a little bit longer than usual for guidance to come through Treasury or through DC, Congress, etc. So hang in there. We feel your pain as tax preparers. So what I would suggest you do is try to find all that tax information, gather it up, put it together, reach out to your tax preparer. If you have questions, concerns, if you have, specific questions to your business, talk to your Padgett office. Let them help you figure out some of this. And just remember, the fastest way to get a refund is to electronically file. Direct deposit, it's free, simple, secure. I highly recommend going that route, not going it alone, going it with a tax preparer. And lastly, just take a deep breath and let us try to help you get through these difficult times. So hopefully everyone's tax season will go smoothly, but I imagine this year is going to be quite different, just like last year was quite different. So hang in there. We're with you. We're here to help you. And with that, I will try to take some questions. So if you have a question, please use the question box. You can type in your question and I can sort through them or read them aloud. So I will go ahead and open the question box and see what we have here. We've got actually two questions as it relates to this. How does the retention credit apply to sole proprietors? Is there a way for a sole proprietor to get the retention credit?
Unfortunately, only if you have employees. It's based on how much you've paid employees. There is no retention credit for the sole proprietor themselves. So sadly, you can't use yourself to get the credit, but if you do have employees, the same rules would apply to those employees as they would for any other business regarding the coordination between the PPP loans and the retention credit.
Exactly. And how about that $1,000 per employee disaster grant? How is that taxed?
The good news, if you got anywhere from 1,000 to 10,000 of a disaster grant, that money is tax-free at the federal level. As Annie just mentioned, the states, they can do what the states do, but at least at the federal level, that is tax-free money to you.
And I'll also mention, I see a question in here about state grants. So some of those state fundings, those are considered taxable at the federal level and likely tax exempt at the state level. You just have to depend on the state, but those tax grants, state tax grants would be taxable. Will the IRS extend tax season?
Not if they can help it. They have resisted any attempts this year to extend tax season. Now, there are tax preparer groups who are asking for an extension. Interestingly, nobody seems to ask the taxpayers what they think. Right now, it seems to be a discussion between the tax professional community and the IRS. I think if you got a refund, you probably just soon go ahead and file and get it over with. But the IRS has resisted it, but it's partly a political decision, so stay tuned. Again, a year ago, March 2nd last year, we didn't have any earthly idea that the tax date would be extended, but it was. But as of right now, the IRS says no, but that can change.
True. We've got a couple of questions actually coming in as it relates to a home office deduction. So I know many of you and your employees have been working from home or remotely or some kind of hybrid version of that. As an employee, as a W-2 employee, the home office deduction is not available to you. So the only way to sort of get reimbursed for expenses that you paid working from home is to ask the employer as a reimbursement. So an employer can decide to set up what's called a reimbursement plan to help their employees, whether they had to buy equipment, upgrade their internet or security system, get printers at their house, etc. But employees, W-2 earners, technically are not allowed for home office deduction. If you are self-employed, so you're Schedule C filer, and you have a designated home office space, then there is the ability to deduct some of your related office expenses. Let's see here. Are there any tax benefits that can be taken if a business operated in 2020 but did not sustain a loss? So I think Roger was talking about the ability to get an ERC even if you didn't have a decline in gross receipts, but your business was affected due to state, local, federal restrictions on operating.
Yeah, if I understand that question, yes, you don't necessarily have to have a decline in revenue to qualify for the retention credit, but you have to be able to prove, obviously, that you were covered by some government mandate. And the guidance, how quickly things change. The IRS put out 100 pages of guidance on this exact topic late yesterday afternoon that we had to read in preparation for this session today. And the one thing they made very clear is some politician giving a speech talking about the challenges that small business faces and things like that doesn't qualify as a government mandate for the credit. It's got to be something official. It can be state, local, or federal, but it has to be some sort of official mandate. And if that's the case, then your revenue, I guess, could go up and you'd still qualify as long as that was, if you were able to somehow survive those mandates and have an increase in revenue.
Exactly. A couple of more questions here. Sorry, it looks like my video has frozen, but I will continue to chat with you. So I did not apply for a PPP loan in 2020. Are you saying that I can still apply for one? And when should I do that? Or does it have to be a PPP loan too for 2021?
Well, certainly if you have not applied for I'd make 2 points there. If you have not applied for a PPP loan as of yet, certainly look at your eligibility for one now if you qualify and if you need the money. But also, you potentially are eligible for the employee retention credit for all of 2020 because you didn't have a PPP loan. So again, get with your local Padgett office and look back at the opportunity to see if you were eligible for that $5,000 per employee credit for 2020. Then decide whether or not you want to apply for a PPP loan in 2021. Because if you don't, and again, you were eligible for the retention credit in 20, I think you'll be eligible for it in 21 more than likely, and that's another potential $14,000. So there's a lot of potential money out there for you. So get with your local office, go through the details, and decide what's best for you.
Okay, a few more questions here. I know we're right at about 12:45. So if you can't do the ERC for self-employed, what kinds of credits are out there for Schedule C filers with no employees?
And I assume they're talking about a tax credit similar to the employee retention credit.
Yeah, just benefits related to COVID.
Yeah, I mean, obviously you're eligible, and we discussed about a PPP loan at perhaps a higher amount if we get that guidance from the Biden administration. There are some other things that again, we've tried to keep it not getting too far into the weeds with some of the more specialized tax credits. There's sick pay and family leave credits, and there's things such as that. There may be, again, a lot depends on whether you have employees or if it's just you. Again, I would suggest that you get with the Padgett office and let them analyze your situation as it relates to your business, your employees. There may be some, but they're probably not as valuable as the retention credit or a PPP loan for the masses.
And one more question, and then we'll go ahead and do our closing. The PPP loan amount increased my business income, deposited into my bank. So how is this worked out of income? And I understand the concept there. So in general, the rule is that the PPP loan amount is not taxable, and qualified expenses associated with a forgiven PPP loan are deducted. Win-win, right? So how does that happen all on the books? Well, that's why your tax preparer is there, but you'll basically show that as non-taxable income.
Yeah, and one thing before we turn it over to Jeff, one thing I have not mentioned, and it's probably maybe too technical, but I want to alert you. There is an issue with, unfortunately, many of you are showing losses for this past year. And you are able to sustain your business with these PPP loans. Those losses may or may not be deductible in 20. They may not be deductible until 21. There's an issue regarding basis for losses. I'm not going to explain it to you here today, but if you are in a position where you have showing a loss and you're expecting it to be taken on your 2020 tax return, let me suggest that you talk to your Padgett office and ask them specifically, are my losses going to be fully deductible, or am I going to have to carry some of them over till 2021? Because you may be surprised. It ties back to the PPP loan program. It's some of the guidance we're still waiting on, but as of right now, some of you may have losses that you don't lose them, but you can't use them in 20. You may have to wait and claim them in 2021. So yeah, I guess it's time to thank everybody again for joining. I hope this was beneficial, and we'll turn it back to Jeff to wrap it up. Thanks, Annie.
You're welcome.
Roger, Annie, thank you so much for preparing this. We have a lot of questions, some that didn't get answered, and if we weren't able to answer your question, we encourage you to contact your local Padgett office, and they can help you with that information. You can see how quickly things change in this world. We are doing our best. It's our job to keep on top of all of this changing information and then relay that to our local offices and in turn to you. I mean, we'll continue to keep track of the ever-changing landscape here and relay that to you. But as one of the follow-ups, we'll be contacting you with a request for some feedback. What else would you like to hear from us? We'll go and find the answers for you as we prepare future tax updates. So that's it for now. If you know business owners in your community that would benefit from knowing this information or benefiting from some of the services that your local Padgett office provide, we'd be grateful for an introduction to your local Padgett office. Many are struggling trying to figure out this landscape around tax right now, and we know that we could help them. Thank you to our over 180 local Padgett office owners who drive this business and who provide our services to you clients. We appreciate you so much for being here. You are the backbone of this economy in the United States. You're the backbone of job creation. It's our job to keep you informed and keep everything that comes out of Washington, D.C., simplify it so that you can make the most of all the opportunities available to you. Thank you for being here. We will see you down the road. We'd love your feedback. Tell us how we can help, and we will wish you well. Have a great March, a great rest of your spring, and we'll talk soon. Bye for now.
Bye.